Hello, investors. This is Connor Bates, Associate Portfolio Manager with Revere Asset Management. Today is Wednesday, April 23rd, 4:43 p.m. Eastern Time, coming to you with tonight's Revere Roundup Daily Market Insight video. Market state still in a harsh correction, but we're not denying the fact that we did get a fall through day yesterday, but we would classify it as pretty weak. Um, you know, Obviously you have your indexes meeting the criteria for the fall through day. And then when you take it a step further, you're looking at leading stocks. You want to see a lot of leaders breaking out on volume, up big on the day, and really just was lackluster, to be honest. So that's kind of the art of the follow through day, gauging the stocks yourself, and that's why we're classifying it as semi weak. But we'll see how the market acts into the rest of the week. Taking a look at the trend gauge over here, market leaders still red arrow, but we have that yellow sub arrow again. We can find some decent leaders, but the evidence, there's not a ton right now. Short term, still have the red arrow under the 21 EMA. We bounced around that like 6, 7 times back and forth. Very indecisive around that level. Plus, it is sloping down, but put that yellow sub arrow. We were moving up a little bit after hours, so could close back above that tomorrow. But for now, still trading below. Medium term, well below the 50-day moving average, and long term, well below the 200-day moving average. So what happened today? Well, kind of a gap and fade. We opened up around 2% and initially rallied and started the day and then just kind of started to fade. And just to summarize, this choppy conditions persist and not seeing follow through strength, and a lot of these gaps continue to be used as places to sell into strength for big funds. Here are the final numbers. Big 8 up 3.18%, RG8 up 2.06%. 60/40 stock and bond up 0.76%, and GROTECTION up 0.37%. I mean, as you can see, just looking at the final numbers, it looks like a pretty good day, which, it's not the case, certainly, as close near the lows of the day, but see what tomorrow brings. Alrighty, let's get into the interasset correlation. And as always, we'll start with the chart of the S&P 500. And like I mentioned, so gapped up, still struggling at this 5,500 level. I think that's going to be the key spot to break. But then again, you have declining 50 and the flat 200-day moving average closed below the 21, but did close above the 8 EMA. And one thing, this is a downtrend. And one thing is emotions are always high in a choppy market, especially in a downtrend. And one thing to always think about is buying strength, buying a gap up in a downtrend isn't usually your best bet. Obviously, once they start to work, that's your cue that, hey, maybe buying strength is going to start to work. But you wait until that starts to work. And today's a good example that anyone that bought in the first hour is red on the position. You can see, bought, even took your opening range highs, but even if you bought the first 5 minutes, you're still down because you can look where we close. And I like to use the analogy, in a bull market, you don't short pullbacks. And that's kind of the same thing. If you're in a bear market, you're not going to buy rips. So just something to keep in mind. Obviously, it's a case by case situation, and in the moment, it's much easier said than done. But for now, we're watching this 5,500 level, watching if we can get back above the 21, the 8 EMA going to hold for support, and is this fall through day low going to hold? And then obviously we did find support at the August 5th low as well. So plenty of levels to watch. Take a look at the 60-minute too, just to see. And again, we're just in this big range, a lot of chop, a lot of frustration, head fakes left and right. So it's a wide range, a lot of volatility. RSP, similar thing, gap up and fade. QQQ, similar thing again. You got this 466. That is the ninth high. And again, all this movement, we're still in that in the ninth candle range. So again, no clear direction here yet. And then even if we do get back through those highs, you have the 50-day and the 200-day to work with. So definitely a level by level market right now with no clear trend. Mag 7, similar thing, rejecting. Dow Jones, again, rejecting. And you can see that's kind of the summary for most of the indexes and individual stocks. 21 EMA has been the ceiling for many weeks now. So strong thrust above and a close could signal a character change, like I mentioned, and maybe buying strength starts to work. But for now, still rejecting. Russell 2000, similar thing. ARC actually above but below the 200-day. FFTY closed right at the 21. The VIX, this closed back below 30. That's a good sign. This was staying above 30 for many days. And now if the VIX can start to peel back down, that could be good. In the best case scenario, would be VIX coming down, volatility coming down, and if we formed I'm going back to the S&P, but if we formed a tight consolidation below this 5,500, took it out with volume, that'd be best case scenario. But you obviously don't always get what you want. The dollar trying to stage a reversal here, coming in back into that 100 spot. Gold down 2.5% on the day. And the pullback in gold has coincided with the relief rally in equities along with the follow through day. It's got pretty parabolic. You can't see on market surge, but I believe this was like 8.9 ATR above the 50-day moving average, historically extremely extended. It's 25% above the 200-day moving average as well. Let's fact check that. Yeah, or let's see. On this day here, it was 26.5% extended from the 200-day, which is huge. And then, came back in, but it did start to bounce back a little bit, coincided when equity started to pull back and close mid-range. This is just likely going to need a new base or a touch of the 50-21 day, still pretty extended. Gold stocks pulling back to the 21-day. Silver, relative strength here today. And a lot of people have been talking about, silver's been lagging gold. That's pretty clear, although it still has been showing some relative strength. So maybe if gold starts to pull back, pretty notable that silver had a strong day today, up almost 4%. So maybe this starts to play catch up. Gold comes down and it closes the gap between in that divergence. Bitcoin continues great relative strength here. One of the best looking setups in the market, extended here 3 days up. It can pull back and handle. We definitely look to add to the position, but moving average alignment's much better. Double bottom off the 200-day moving average, back above the 50-day. So now if we get some right side development, some symmetry in this chart, that's set up really nice for some adds to our IBIT position. Bonds rejected the 200-day TLT. Again, just kind of rejecting, close near the lows. And rates, big undercut reclaim of the 21 today as well. Alrighty, that's the interasset correlation. We will take a look at the tail of the tape. Percent of stocks with the 5-day moving average. This is back into overbought, so potentially we consolidate. That gets back down to oversold. That could be a good buying opportunity. VIX first close below 30 in some time. And then the news. So what initially kicked off this overnight rally and how we opened up 2% was Trump said tariffs on China will not be as high and no intention of firing Powell. Market like that. And that's kind of what started the initial rally overnight and followed through it into the open. And that's just another testament, this market really could go either way. There's pretty mixed bag in terms of sentiment, headlines left and right. We know that a good headline or a bad headline can move the market substantially in either way. And so, when there's many conflicting signals, best case is just to be patient, hold cash, and wait for the pitch. Today's keys, S&P and Qs versus the 8, closed above, but closed below the 21. Leadership, mixed bag, putting that yellow sub arrow. And then follow through, again, mixed bag. We were up on the day, but closed near the lows. So, not amazing, not horrible. Just have to see how this shapes up into the rest of the week. Day count up 2, 1 day back above the 8, 20 days below the 21. Expectations are still negative. Sectors wise, uranium, software, semiconductors, cyber, Bitcoin, all strong today. And then weakness, gold, oil, staples, energy, home builders. GROTECTION today closed the hedge, so still holding SPLG, IBIT, Palantir, Netflix, 0.3, RVAB, 1.32% balance at risk. And then Thursday's keys, watching the same stuff, want to see more leadership, want to see more follow through, want to see those moving averages hold. Bottom line, gap and fade, choppy conditions persist. All right, let's take a look at some charts of interest. Let's start with some earnings. VRT reported earnings and gap up into the declining 50-day reject, and just kind of an all-day fade here. Not the best reaction, but this is kind of what you tend to see in stocks in a downtrend. Just as if when a stock's in a strong uptrend, you tend to see more beat and raise quarters gapping up higher, and then when you're in a downtrend, you tend to see more gap downs and even gap up reversals like VRT. GEV, another one that we like but needed set up. This one gapped up higher on earnings, closed near the lows, but again, got this moving average cluster right here. This one did hold above this downtrend line from the high, so maybe this can digest a little bit. Not the best close, not the worst close. And then after hours, ServiceNow reported this one's up 10%. Be key to see if this can hold, because again, this is into 900, so into that 200-day moving average. See if that can hold, or if it's going to pull like a VRT and fade. IBM, this one's down 5%. And then CMG also reported this one's down 3%, just continues to make lower highs in a downtrend. So some earnings, and then let's take a look at some charts. And I talked about, we said it was kind of a weak fall through day because, you can kind of count on one hand the institutional liquid leaders that had nice setups going into that. Obviously, the number one, pretty much everyone sees this on their screens, Palantir, another strong day today, up 7%. But this one's breaking out of this base, closed back above 100. I mean, this one looks good. But again, this will be a good gauge. If this can continue higher, then that's a good sign for some of these growth stocks and buying strength. If it can't, this is one of the best institutional fundamental names, and if it fouls, that wouldn't be a good sign either. So again, day by day, so many things can go either way in this market, but this is probably one of the best probably the best name to own right now. Netflix, close first or second. This one's falling through out of this double bottom base, and on that earnings, uh, 1064, that's left side highs. Definitely needs to take that out convincingly to see continuation, or it can handle out here. But again, this one's acting good. CrowdStrike, this is another one in that, liquid institutional name. And again, this one's trying to get back through the pivot, stalling out a little bit. Again, just, all this price action is very choppy, not super clean and tight, but kind of what we're working with in this market right now. This one needs to get through 400 to see some continuation. HUD, and then on the other hand, some names that gapped up, but shooting star candles against moving averages. HUD was up nicely into the morning. Again, similar thing. Strong push out of the gate, and then just kind of downside all day, rejecting the 50-day. See if these lows can hold into tomorrow, or this could roll back over. Surprised this hasn't been stronger, especially with the bid in crypto. Uber, this is another one, like this one a lot, but again, this is just such a choppy base. So really this one needs to break out to see some cleaner price action, but fundamentally we love the story on this one. It's held up well. It's one of the few tech-ish names that are so green on the year. So want to see this one, blast through 80 and stay. Take a look at the weekly. Again, one of the best weekly bases that I see in the market right now. Monthly too, just a beautiful monthly flag. But in these weekly bases, there tends to be a lot of frustration sometimes. So the best way of action is sometimes just waiting for the breakout. If it's going to work, it's not extended at all. If it's going to run, we saw plenty of those in 2024. Carvana, this is another one that's holding up pretty good. Closed better than most today, back above all the moving averages, back above this downtrend line. See if this one can continue higher. MSTR leading the pack for Bitcoin looks really good. 235 to 345 out of this double bottom off the 200-day. A little bit extended here. But if Bitcoin continues to stay strong, this one looks good. Maybe handles out here, right side development. Nevertheless, just keep this one on your watch list. This one looks good. Let's see. Spotify, another liquid leader, double bottom base, stalling at that 621.20 pivot. Maybe can handle or push through. Or if these aren't going to work, you want to see these hold that fall through day lows along with, today's lows as well. Eat, this is a food stock holding up pretty good, although closed near the lows. Again, the follow through low on many of these names is a good line in the sand to trade against. TGTX, biotech name hanging out at the highs. This one looks good. Looks nice for some continuation. Sprouts Farmers Markets, again, coming up the right side in this cup. Maybe this one starts to handle out on the right side. Geo, this is another one that's been hanging in, kind of forming a tight little range here. Definitely one of the best performers since inauguration. This is a private prison REIT. This one looks good as well. And then, semiconductors continue to be lackluster. Nvidia, really no progress, just continues to make lower highs. Oh, I did forget Tesla. Um, this one closed up 5.5% on earnings today, but still kind of in no man's land. But as long as this one can hold these lows down here, maybe this is carving out a bottom. Pretty poor earnings, but obviously, optimists and all that. That's what investors are betting on for Tesla. And despite the bad earnings, this one closed up on the day. And it's funny online. You see a lot of longtime Tesla analysts, huge bulls throwing in the towel. So maybe there's a sentiment indicator in there somewhere. And then just some general other med cap tech names. Apple holding above the 21. Microsoft rejected, just continues to make lower highs. Google, again, similar thing, continues to make lower highs. So still a very choppy market. Not a ton of not a ton of conviction either way. Want to see more leaders start to set up. Want to see the indexes hold above the 21, get through this 5,500 spot. But then again, is it going to be a short-term rally into these? Take a look at the weekly. Still, the weekly moving averages, the uptrend support line has been taken out. So, like I mentioned, headlines flying left and right really could go either way. So we're keeping an open mind. And if there was ever a market to keep an open mind, this is the one. Strong opinions, loosely held, just kind of going into each day with a plan, with a bull and a bear scenario, because this market is so fast and it's changing so much with all the news, data, setups, and etc. So, that's pretty much all I've got for today. As always, we will be updating you every night with our thoughts on the market and keeping you guys in the loop. So that is going to wrap it. As always, I'd like to hear from you. My email is connor@revereasset.com, and you can always reach out to me on X at ConnorJBates_, or you can call us on the phone, 855 Real Wealth, 855-732-5932. And if you're ever interested in becoming a client, as always, please reach out. And that is going to wrap it for Wednesday, April 23rd, 5:01 p.m. This is Connor Bates, telling it like it is. Thanks for watching and have a great night.